think we got another one around here. There's another one around somewhere. Hey, welcome to the Closing Beat, everybody. Happy Monday. How you doing out there? What's up? Welcome, MW Green. That is right. What's going on? Comments. Clever names there. Hope you had a good weekend. I had a great weekend, actually. Celebrated birthday weekend. Got a little getting away time. Took everybody on a little trip. And excited to be back. I gotta say real quick, though. So the people at Whistle Pig, I'm not messing around. I can't really like show you. I guess you can't see that too well, but the people at Whistle Pig, I don't know if you're familiar with Whistle Pig here. They sent me a letter, little happy birthday letter. Happy birthday, Dustin. That was cool. And then they sent me their old-fashioned kit. So just out of nowhere. I don't know what happened here, but check that out, man. They sent over some Whistle Pig rye, clever little pig to stick in there when you're pouring it out and stuff. Sent over the Whistle Pig maple syrup. Huh? I mean, that looks good, too. And then, of course, you know, for an old-fashioned, you got to have your bitters. So they sent over a Run-A-Muck maple bitters, man. I thought that was really cool. I appreciate it, Whistle Pig. I don't know how you found me, but cool little bag and everything, or box that it came in. Let's see if I can show you here. And it just kind of came ready to go. So I'm not really interested in the box, but I like everything else that came along with it. So big thank you to Whistle Pig. I'll be making an old-fashioned tonight. That was awesome. So that was kind of a cool birthday present. Just came out of nowhere. Other than that, I had a great weekend. I am ready to get going. I'll let you know how it is because I'm not... I do like Whistle Pig, but I've never made a Whistle Pig old-fashioned. So I will test it out. We'll let you know how it goes because that was pretty cool, right? Celebrating the 40th birthday there. Hey, we'll be back this week, Thursday, for Wine and Wealth. We do that every week for clients. So just little tips to help you get your dough straight. We're the financial advisors that like to teach. We don't just like to do, and then you talk to us a year later. Every week, I like to come at you and teach you something new, keep you updated on what's going on. On the weekends, we do an email called Notes from Jazz, and I was gone this weekend, so Eric took over and had a great planning email as far as teaching the difference between cash flow and Monte Carlo simulations. What does that mean? Why would you do one versus the other? And what's the flaws of each one? And so a little lesson there. I didn't ask him to do that. It just kind of came out of nowhere. So that was great. And also, by the way, on Instagram, the other jazz.wealth, that's not us. That's some sort of automated thing that's going on there. Anyways, this week, our FinTips videos, we got a lot going on, if you can't tell. Our FinTips videos are posted at the bottom right, so you can see down there, both me and Eric were doing some videos. We got some various topics this week talking about 529s, how the wealthy do that asset-based lending. I break it down for you to show you exactly. That'll come up tomorrow, actually, for you. And so hope you enjoy all the stuff that we try to do for you just to get our name out there, of course, but also teach, right? The goodwill of teaching keeps you in the back of your mind, hopefully, when you're maybe need an advisor or decide you want to get going. We are the only advisors that say, we're here for everybody, right? We're not trying to pick on only the people that have $10 million. And so, you know, you can make all that money and stuff, but other advisors will do that. We will hang out and teach you stuff here today. And we're going to talk about the stock market, of course, because it's the closing beat. That's what we do here. On the right-hand side of your page, you can see that the markets were mostly green. They did start higher, a little frustrating there. So the stock market actually started higher overnight and into the start of the day. But it's just like I've been saying, we're getting into that summertime volatility where the morning is where all the action is, and then it just kind of goes to sleep, right? Now, we have plenty of news coming up this week. You got the inflation numbers coming up. You got the Fed just 8 days from now looking to raise rates again. So inflation will be the key number this week. Lower inflation, bad for stocks. Last week's jobs numbers actually came in better than expected, which means the Fed doesn't have to slow down. So this path of these half-point rate hikes and just beating down the, hopefully, inflation is bad for stocks, right? So in the short term, that's probably put a little bit of a lid on our recent rally that we've seen there. All bets are actually in place for another half-point rate hike. I believe it's a 99% chance that that's actually going to happen. Do you guys know how that works? You guys know how they come up with the odds? Maybe we could use that as a lesson here today. Give me a second. I'll pull it up for you. There's a 99, 98% chance of rates actually going higher, and that's just not a guess. That's based on actual bets that people are making on the Fed fund futures. You can actually bet on that if you'd like. It's not the most exciting thing ever, but this should work. Let's go and see what happens. Yeah, here's the page. You go to the CME group, you can actually look up the Fed Fund Futures Watch tool, and this basically just reports the amount of transactions going in different ways or going over different time periods for the bets that rates will be hiked by a quarter point, half point, and so on and so on. And the way you read this, up at the top, you've got, let me know if you guys know how to do this. I just move on. But the way you read it, you go up to the top. These are the various points where the Fed is scheduled to meet that are on record. These are expected, but not officially scheduled. And so you got June 15th is the next Fed meeting there. So your meeting date, this is the actual contract if you want to look it up there, when it expires, blah, 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 right? Down here, they sort of put in a nice visual form to say, we're expecting, there's a 98% chance based on people's bets that the Fed's target rate will now be 1.25 to 1.5. And usually on here, they'll show you where it's at, just so I can maybe go a little bit further for you. So that here it is, current target rate. So where we stand now is the low end of the range is 0.75 all the way up to 1%. And there's a 98% chance that they think the range will now be 1.25 to 1.5. That would imply that you would need a half point rate hike to get you there. And so that's how when they say like, oh, there's a 98% chance that there's a 0.5% rate hike coming, this is where they're getting that data from. 2% of the participants feel like there's going to be a larger rate hike. And then you can look down here to see how has that changed. That number's actually, if you look over here, a month ago it was 16%, a week ago it was only 2%, 1 day ago it was 1.8. It's currently sitting at 2. So that number has dramatically fallen off. Basically, a month ago we thought an 83% chance, or people were betting an 83% chance of a half point rate hike. A week ago it was 97, yesterday 98.2. It's sitting at 98% right now based on the contracts that are coming in. You can actually go forward too and you say, well, what's the projection, right? So we got June, we're looking for a half point rate hike. That would put us at 1.25 to 1.5. You could say, let's go to July. See if it loads there. Yeah. So in July, you would be at 1.25 to 1.5, assuming that's right. So then to go to 1.75 to 2, which is getting close to their neutral target range, that'd be an 86% chance. So it's largely expected right now that over the next 2 announcements, they're going to go up a half point each time. And you can see how that's changed as well. So there was a month ago, or like, 79% chance. Then a week ago, it went to 93. It's been tempered a little bit, and we've come back down to 86. So people are saying it's either going to be a half point hike or maybe even something more, which you could see is a lot more probable based on what's going on there. So again, this is not my tool. This is at CME Group, and that gives you a way to kind of see what they're talking about. So you don't have to just take their word for it. There's your little lesson of the day, and hopefully that helps. I didn't mean to go off on that tangent, but that's a little something extra for you guys. If you look at the S&P 500 today, that's where everybody's looking. Summertime volatility, with the inflation lid put on the market. So what that means is if you're a longer term investor, you don't really have anything to do here. So, you're not buying day to day. You're just like, all right, am I in buying mode or am I in profit taking mode or whatever you've decided? Well, you look at this and you say, if we do get a pullback of any amount, bad news hits, something causes the market to sell off, tomorrow's weak, the next day's weak. Well, you look at this and you say, well, that should be buyable. That should be a reason to add to my 401k, IRAs, and things like that. It's not a reason to run away. Whereas maybe some of you ran away during that downturn, not knowing just how bad it can get. This would be what's known as a buyable pullback. So investors would be saying, fine, I missed the dip down here. I was scared. Okay, it rallied. Now I'm not scared. The next pullback, they go, I learned my lesson. I need to buy that pullback. That's what you would expect people to do, which means that pullback likely wouldn't put itself underneath this low unless inflation ticked higher by 1% and, all this great stuff. It would show that the Fed has no control and everybody panic again. And so there's a possibility that happens, but that's what you have going on there. So with buyable pullbacks, you want to go, where do I look? What do I do, right? Let's assume that happens, because if it doesn't happen and the market just continues higher, you're just happy. So we always want to play on the side or how do you want to say it? You want to sort of predict and prepare for the side that will cause you to take action. So if the market goes higher, there's nothing to predict at that point. There's nothing to prepare for. It's just going higher. Yay, right? But if the market moves lower and you predicted that, now we need to prepare. Let's do that ahead of time. That way you're ready. You don't have to scatter around and try to figure out what's going on. So if you're looking around, The S&P finds itself down about 13% year to date, just a little bit over that. It's been mostly flat over the last month because we had this sharp rally, and then it sort of just went sideways over the last few days there. And so you're looking for ideas, right? Things that you want to do. Today is a horrible day to find ideas because everything was scattered, right? You had Apple a little bit lower or a little bit higher on the day. This, by the way, is the Iron Cross. Where are my technical traders at? You got the Iron Cross on the Apple, which means the 50-day, the blue line always on my charts, went below the red line. That's all that means, right? The Iron Cross or the Bear Cross. I don't know. People call it different things. And that's all it means. It went underneath that. So people like to measure those kind of things and say, well, what does Apple do when that happens? It's typically seen as a sign of weakness in the short term to midterm. But for Apple, this has only happened 2 times. You know that? So I went back and looked to see what happened after this happened last time, the time before, and etc. It's only happened twice. So you have 2 different time points to go on, 2008, 2018. And in 2008, it was pretty nasty. It just kept falling. The whole world was falling at that point. 2018, we fell for the first month, and then you started a little bit of a rally. It proved not to be a bearish short-term signal. So nonetheless, you got that. I didn't mean to get off track, but that's what people like to look at there. And so you're looking at Apple, you go, that's discounted. That's a big market mover. Iron Cross, yada, yada, whatever. Am I interested in buying pullbacks or not? I think you'd have to be. The bigger names like Microsoft, right? You got to be interested in buying pullbacks there. Alphabet, Amazon actually has shown you that it can bounce after all that nastiness to the downside. But you still have people looking at pullbacks in consumer staples. Walmart, naturally, because of the discount there. Costco has fallen quite a bit, and people say, well, it's discounted, and that's a little bit scary. It's a sharp discount. But if we fall a little bit again, that's my opportunity. That's where people would probably get excited. You can look at financials as well because they largely have not pulled back as much. Visa, MasterCard being some of them there in the credit card processor space there. You got Capital One. Nice downtrend, but holding its own. Pullbacks be perceived to be buyable there. I think Schwab might not be one. Yeah, Schwab's pulled back a little bit as well. The bigger banks, you can look at like Goldman Sachs. You can kind of start to spread out and say, well, I can't buy all of them. Maybe you don't want to use an ETF or something. Where do I look? Well, Goldman Sachs stands out as one of the strongest and forward as well. S&P Global's had some, S&P Global's had some news that basically puts this in a discounted position from both price and valuation perspective there. So just some places you can look around. If you're looking for sectors in general and saying, all right, market, go ahead and pull back for me. I like what you're doing there. I'm willing to buy it. Consumer discretionary would be seen as one of the more aggressive areas to buy because that is more sensitive to what some people think is either we're in a recession or we're about to be in a recession. That's not where you want to find yourself. Basic materials, also probably not the place you want to find yourself, but it's holding up, right? It hasn't fallen as much as the rest. It's not looking as weak. Communication services would be in there with tech. So if you're looking at something like the XLC or XLK, tough places to buy, right? They're very sensitive to interest rates and things, but maybe that's for those of you that want to be aggressive. Real estate, that's a big question mark, right? So as you're going through, there's only 11 sectors. You go, that's a little bit tough for my blood. I don't know if I like that. Real estate, I don't know. I'm not sure about interest rates and all that and how they'll be affected. Energy, I can't really chase that. It's up 50-something% on the year. Maybe healthcare, basic materials, some of these other boring areas that most people don't like to look at. I would just point out that now's the time to do your homework and be prepared for the next pullback as it happens. Again, if we don't get the next pullback, then you put your homework aside. You save it for another day, right? Better to be prepared than to just stare at a market that's falling and go, now what? I want to buy something. Well, all right. Well, now you're thinking, well, everything's falling. I could buy whatever I want. Do the homework now. Anyways, brief overview. Let's go through the NASDAQ down about 23% on the year so far. A lot of tech names in there, a lot of biotech names in there that don't make any money, that have been beaten down. That's very tough there. Oil, it was down for the most part. Every time I looked at it today, it was down. And then right at the end of the day, towards the end of the day, boop, positive, 0.5% on the day. So I got nothing for you there. You can't chase it. You can just sort of whine about it with the gas prices. There's not much you can do. How do you chase that at this point? You could shoot for a little bit of a higher target, but it's a short-term play here. So if you're not a short-term trader or investor, I don't know how you play with energy or oil at the moment. I don't have any good news. The title of the show today was that the market was basically stronger until rates just kept bleeding. Prices kept bleeding lower, which means rates were going up, and that's hinting at making a new low. So a little bit weak there, or strong, depending on how you look at it. You got gold down a third of a percent. You can't do anything there. Right? It fell. It had its bounce from the oversold sort of sell-off. Well, now what? You worry that you're falling back into one of these traps where it's like slow-going, choppy, volatile performance. So I'm not excited about that. But just want to point that out. The Dow is the best performer year to date. We can get rid of that. Best performer year to date and back to the 50-day moving average, but nothing you can really cheer about there. The Russell waking up a little bit. If you like your small cap stocks, that's showing a little sign of life. And speaking of sign of life, Bitcoin. Is this the bottom? So last week you had, boom, just took off one day, next day erased, and then quiet again. You go, oh, crap. Well, everybody's excited about Bitcoin again. With all the drama going on and all the other garbage coins out there, people move back to Bitcoin and go, well, that's a consistent play. That's there. It's always there. It's the worst currency in the world. But, hey, it's maybe something you can trade, or I know a lot of you like to look at that stuff. All right, what else do we have here? Oh, did you hear the solar thing? Maybe lifting the tariffs on Chinese solar companies there, which you could kind of see. Remember we looked at this? So I said, well, this is how I organize my industry so that I can see. And I noticed that last week, we talked about this, that the solar stocks, they just took off out of nowhere, right? Some of them had really rough pullbacks there. Well, look at it today. Or this would have been as of Friday. Look at how far they've come. Right, so over the last month, look at those returns. It's incredible. You try to pick out the stronger ones. Solar Edge and Enphase stand out as the bigger performers. They had the big move over the last year, 2 years. They haven't pulled back as much relative to Sunrun, SunPower, things like that, although they did have good days today. So keep looking through things like this. Organize yourself so that you're ready for, hey, something's waking up. Remember last week? I don't know what it is. Solar's waking up. Turns out people must have got wind of the China tariffs. Maybe that was news and it just became official today. I never looked into it, but that's what you have there. So organize your industries and your sectors so that just visually you can go, something's going on over there, right? I need to make a change. I need to make an addition. Something's not happening over here. Is my money best used over here? Should I not take a small loss, capital loss or whatever, and maybe go for whatever's happening there without overdoing it there? Anyways, yeah, I rambled on a little bit, so I will move on. Let's do new highs and lows for the day. We could probably skip this for the next couple days. Yeah, there were 10 new highs, 2 new lows, but the problem is the new highs today were mostly all energy. Valero was one of them, very extended. Marathon Petroleum, very extended. In fact, my technical traders out there, if you're looking in the S&P, you got to imagine weakness ahead for Marathon Petroleum. It's not easy to go against that. I won't say that's a home run. And LKQ as well. In the S&P, I put this one down. Just looks like it's trying to break above the 200-day. So if you're looking for new ideas, there's a couple, but they're not the greatest. Kind of summertime choppy things there. There were 2 insurers, by the way. Let's go over here. You got WR. I just thought it was interesting. Hit new highs there. Really didn't pull back through the last pullback in the insurers/financials. And so that one, for whatever reason, showing a little bit more strength in the short term there, and progressive. We pointed that out on the last rally. It did pull back and has since just fired its way back up towards highs there. So those stand out as 2 of the stronger ones if you're looking in that category. But otherwise, there were 2 new lows, and those new lows were the same names. Medtronic. This one just makes new lows every day, so nothing new there. And then Peak is the other one, which I think was on the list last week, Thursday, right? Something like that. That's what you have there. Stocks in the news, then I'll take your questions and get out of your way. Abbott Labs down about 13 or 0.13% on the day today. The formula, they're making the formula again, right? We've talked about this. They're sorry. They're going to make it. They're going to have a FDA person standing right over the top of them and make sure all that goes well. This is in Michigan or something. So they'll probably hear a little bit more about that before that fades away. Amazon, there you go. It's kind of weird to see that price like that, huh? $125. That's not normal. You're just like $1,200, right? Remember, splits don't do anything. Splits are just a change in price, and then they change your shares. That's it. So you had 1 share at $1,200 the other day, and today you wake up and you have 20 shares, but it's worth $124 or whatever you had. So it's called a 20-for-1 split, and all that means is it's a balance sheet change. It does nothing for the stock. It doesn't mean that this somehow is going to go higher. Maybe over time it does, but the actual act of a stock splitting is simply just a balance sheet change. That's it. So that you see a lower price. The second time they've done this, I believe. They did do a split before, right? I'm not losing my mind there, but it means nothing else, right? Don't fall for those traps there. So many people say, I want to buy the stock. It's split. For what? Give me some data. Show me something that says that that's a good thing. Starbucks, not big news here. They're looking for a CEO, and they're not interested in people that work at Starbucks. So I did this with Chipotle when they were looking for a new CEO, and they said, we're not interested in looking internally. We'd be interested in outside participants. I threw my hat in the ring. I didn't get a call back, but Starbucks, I'm not really interested in working for them. It's too early hours for me. But if you like coffee and you're thinking you could do better than Howard Schultz, have at it. Put your name in the hat. You can do that. You never know if you don't ask. Old Dominion. I put this on a list because Old Dominion, transport company, you've seen their trucks. Back to the 50-day moving average. Their revenue per day right now, they said this, not me. Their revenue per day right now is up 26% per day. Their revenue per day. They didn't say our revenue compared to last quarter is up 26%. No, our revenue per day. How is that not worth a shot at maybe this breaks the downtrend there if you read into it a little bit more? I'm not telling you to buy it, but holy cow, good for them. Oh, you got Didi. I'm sure somebody's going to ask about it. So Didi, remember, this is a ride-sharing company over there in China. They said, no, you cannot add more people. They were mad at them for going public here in the U.S. Well, they came out and said that their version of the Department of Justice over there is going to lift the ban and allow them to take on new clients again, or new riders again. So that's good for 25%. Doesn't do much, if you've been holding on this whole time, but it's good to know. And that is seen as sort of a loosening of the strings, if you will, over in China. So all the Chinese stocks had a great day. Alibaba, JD.com, all the ones you're used to looking at, they all had a great day. And in fact, overseas, that pretty much lifted the Chinese market. Every one of them was higher. That was the strongest market overseas last night. Everything. There you go. Yeah, China Life, all of them. NEO, all of them. Yeah. Z and H, the only one that moved lower on the day. These guys are what are they? China Southern Airlines. It's an airline company. I don't know why I'm short of words today. Maybe all the junk I had over the weekend. I had a lot of junk. And lastly, Keurig. Oh, well, there's a couple things. Keurig Dr. Pepper is replacing Under Armour in the S&P 500. That's the reason that had a big move today. So if you like your Keurig, which I use a Keurig, or you like your Dr. Pepper, good for them. Seeing the growth that attracted the S&P, it says, kick out Under Armour. Let's go ahead and put the Keurig in there. Also, on semiconductors, this is ON as a ticker symbol there. They're going to be replacing the Photon Group, IPGP, which didn't really, it was still up 2% on the day. And what was the other chain? Oh, Cerner is getting kicked out of the S&P because they got bought out. And instead, Vici is going to be taking their place, which happened to make new highs today. So somebody knew that the other day. Look at that. It's getting a little head start on the old news that came out. There's some game happening there. That's your conspiracy theory for the day. Other than that, I'll take your questions now if you have any, because tomorrow you got a couple Fed members speaking, earnings from Dave & Buster's, Cracker Barrel, Smuckers, all right, United Foods, Casey's Stores, not much, not a whole lot moving on the plate there. And inflation numbers will be the focus going into the end of the week if you're interested in that sort of thing. All right, let's take your questions if you happen to have any. I think as far as Chinese stocks hitting a bottom here and finding a reason to take a shot, that's a pretty good one. When the Chinese government sets their focus on something, everybody tremors. In China, everybody gets nervous. Oh, no, because that's a different government over there. They can stop you in your tracks. They can force you to sell your company. We had a client that actually had an education company, and he was forced to sell it. Now, he made millions of dollars, but they forced him to stop doing what he was doing and sell it to another Chinese company. So that's a different game they're playing over there. When you see the Chinese government say, we're going to just we're going to hold back a little bit. Go ahead. We're not going to clamp down so tight. That's good news for those stocks over there. So that is pretty good. Because inevitably somebody's going to ask that question. Huh? You think Amazon or Google, which one's more recession-proof? I'd probably go Amazon. But what does recession-proof mean? There's no chance that Amazon doesn't fall during a recession. So if you're just wondering like which one would lose less, probably go Amazon because Alphabet would still be focused in on, we'd be looking at their advertising revenues, right? And what do people do? Look what's happening out there, right? Cutting workforces, stopping hiring, Uber, Lyft, Tesla. They stop when they start tightening the purse strings. They go, how do we do this with less employees? And how do we spend less money marketing our business? So I would probably lean that way. You could argue it though. Like cute humor. You could make a good argument. I'd buy it. So I'd want you to first define what does recession proof mean to you price wise. Yep. Brent says JP Morgan was a value weeks ago. Trading down there. It's not bad. You think of long term? I like JP Morgan, Goldman Sachs. If you have to pick on the big banks there. Yeah. What happens if China invades Taiwan? They would send some people over there and try to take it over. I mean, what they would do or how they would do it, I don't know. I don't track that stuff. Could you imagine though? Hey, let's lift some tariffs. Let's buy stuff from China, and then all of a sudden they start making moves to do that. Remember what they did with Russia? Shut it down. No buying, no doing anything like that. Ooh, be a tough one. So that has to be a little question there. You're going to go buying stuff and then have it be blacklisted like the Russian stocks and Russian ETFs? You like your defensive names there. What about Raytheon? Raytheon, and then I'll put this aside from 3M because I saw you ask that too. So you look at Raytheon performance relative to the market and say, that one's holding up, right? Put aside what they do for a second. Just purely technical. All right, for whatever reason, people won't be selling that one as much and are not selling that one as much. So I would not look at 3M because that's basically dead money. Let's see. Yeah, see, it's still dead money. So there's no reason to start a position on 3M and guess that today is the day that I pick the best price and it's going to move out of this 3-month range here of doing nothing. So I don't want to look at that one. Remember, we all have limited sums of money, right? You want to put it somewhere where if you're right, you're making money right away. Your return on your investment's good. If you're wrong, okay, you can admit you're wrong and move on. You're going to get some wrong. So you don't want to admit your money or put your money towards something that's not moving. How do you justify that now's the time? There's no earnings or anything coming up. There's no news to speak of. So you'd be the lottery ticket, essentially. Yep. Yeah, I think he probably was asking, like, how would our stock market do if China attacked Taiwan? I think it'd be a bigger deal than what's going on in Russia, but I honestly don't know. That's pure speculation there. Yep. Yeah. Nancy Pelosi at it again. Yeah. Using the Apple options, trying to get long on Apple, trying to get long on Microsoft with obscene amounts of money. What, $2 million? If you add all that up and take the higher end of the range that was reported, $2 million. Where'd that come from? Well, come from the profits of the other trades they made. That's frustrating. That's frustrating. I have to sit here and patiently say, well, I don't know if I would buy that, but I can't tell you what to do. And I'll get in trouble. But her husband can go buy whatever. Or, it's him that's doing it, but yeah. Come on. How is that right? At what point does everybody put aside the arguments that we have over abortion or whatever, the hot topic is, and go, wait a minute, let's just stop for a second and all agree we need to fix that. Don't distract us with the other stuff and everything that's going. No, we're going to fix this for a moment. We all want government to focus on this. There's 535 of them. What, 300 million of us? Why are we getting distracted by other things? That rule is one I think we could all agree on. Stranger Things. Never seen it, man. Never seen it. I saw the DUI thing. It came up as an alert for me, but I don't know. Yep. Anyways, I'm about to hop on my soapbox and do my thing, and that's not what you're here for. So I will wrap it up there. I appreciate you hanging out. Hope you learned something. Sort of a off-topic thing about the Fed Fund futures and how the probabilities play out there, but hope you learned something there. We'll be back tomorrow to do this all over again. And if you want to see specifically why the asset-based lending approach for the wealthy works for them, like dollar for dollar, I'm going to break it down for you on the old whiteboard over there tomorrow. Right? So check out our FinTips videos. And if you like things like that, you know, if you hit the subscribe button, that means a lot to us. We appreciate that one there. You enjoy the rest of your day, and adios.